Hello and welcome to the latest Brunsdon investment market update. I'm Brian Morman, Chairman of Brunsdon Financial, and today I'm being joined once again by Mark Shields, Investment Director from Brooks Macdonald. Good morning, Mark. Brooks Macdonald have been carefully selected to manage the Brunsdon investment funds, and using their expertise, the team analyse movements within the market and make tactical changes. In this video, Mark will be answering some topical questions and provide us with a wider context as to what has been happening in investment markets. So good morning, Mark. Markets have been resilient despite expectations earlier in the year for a recession. Why is this?
Yeah, hi Brian. You're absolutely right. Earlier in the year, I think investors largely the consensus was that we were going to have a recessionary environment at some point in 2023, probably by the summer, and that's sort of failed to materialize, if I'm honest with you. So, we definitely have seen that recessionary risk beginning to recede. Largely that has obviously been quite well received by markets, and they've sort of moved ahead in a reasonably positive manner. So investors have started to price in what's called a soft landing, which basically means where economic growth does begin to slow, but we don't get into a nasty recession as inflation level begins to fall. And thus far, that has broadly been borne out by the data. We've seen economic growth or economic data begin to slow somewhat, whilst inflation has also started to fall a little bit. So, the high-level economic situation has apparently not collapsed. Markets have been quite well supported by post-COVID fiscal stimulus, but also we've seen things like US earnings in particular remaining very robust, with the tech sector in particular being very, very strong. So I think all of those factors combined have meant that the market has sort of almost moved on a little bit from the notion that we were hearing quite a lot at the beginning of the year, that we were going to see a nasty recession at some point in 2023.
So are there still recessionary risks out there?
I think there probably are, if I'm honest with you. Yes, I do think that whilst that recessionary risk has abated somewhat, I still think that there are risks that we need to think about when we are putting portfolios together and considering investments. It's worth highlighting things like US home prices have contracted to a level only seen 2 times in the past 60 years, in 1970 and 2008, both of which preceded some nasty recessions. Mortgage demand has fallen to 1996 levels in the US. In the UK, we've seen mortgage arrears spiking and repossessions coming up quite significantly as well. And we're seeing other issues in things like office vacancy rates that has potential issue for, in particular in the US, regional banks to issue credit. And some leading economic indicators are contracting a little bit faster more recently, some PMI data, etc., which often, in the past at least, has been a bit of an early warning sign. So there are still issues out there. A lot of focus is on the consumer at the moment, and it's worth pointing out that certainly in the US, excess savings are dwindling. So quite a lot of that COVID stimulus that we saw, that was essentially checks that were paid out to the public in the US have largely diminished. So there is this chance now that the consumer does start to reduce the amount that they will spend. Their propensity to spend will decrease, and that would then have a knock-on implications for not only the economy but also markets as well.
So how would you see that impacting markets and indeed the Brunsdon funds?
Yeah, so I think a lot of that is going to depend very much on whether we do see this recession start to develop, if we do see a recession start to develop. So at the moment, obviously, there is this view that we could be in this sort of environment where we see softer economic growth and softer inflation. And against that backdrop, we'll probably continue to see riskier assets continue to do well. But I think equally, if we see inflation start to uptick or remain high, then I think the increased chance of a policy error from central banks means that markets may reassess that and start to price in the chance of a recession and potentially bring markets back down again once more. So in conclusion, we think that the chances of a recession are diminished, but they have not completely disappeared. And that could well change in terms of market view if we do start to see any indications that recessionary risk might start to increase once more. That'll be quite negatively impacted in terms of market performance.
Okay, Mark, well, thank you for that overview, and thank you indeed for watching. As always, if you have any questions or queries, please be in touch with us. Thank you.